Pensacola, Florida. Maybe it's not always the first place that jumps to mind, but lately there's a definite buzz.
Yeah, you hear that Innovation Coast nickname getting thrown around.
Exactly. And you talk to people. Like, we saw this Reddit comment from someone who'd been away and came back.
Yeah.
Just shocked, they said, by all the new building, the new businesses popping up.
Right, you really get that sense of momentum. Things are changing.
So today on the deep dive, we're really honing in on that energy, specifically thinking about, rental property investments in Pensacola.
Hmm.
We figure you're listening because you want to get the real story, understand the market quickly, but also thoroughly.
Sure. No fluff, just the insights.
Right. So we've gathered info straight from the city of Pensacola itself, looked at the latest rental data, considered some of that local chatter like the Reddit stuff, and dug into the economic reports.
A pretty wide net of sources then.
Yeah. And our mission today, pretty simple. Pull out the key insights, the stuff that really matters if you're considering, putting investment dollars into Pensacola rentals.
Okay, sounds good. Where do we start?
Let's start with that growth feeling, that Redditor shock. It's not just anecdotal, is it?
No, not at all. It actually lines up perfectly with the city's own planning. They have this report, Strive to Thrive, Pensacola 2035.
Right, I saw that.
And it basically describes Pensacola as being at a, quote, turning point. They're actively planning for growth, but also focusing on livability, quality of life.
So it's not just random building happening. There's a strategy.
Exactly. It's a deliberate evolution, which, for an investor, that's a really important backdrop. It suggests stability, planning.
Absolutely. And for anyone looking at rental investments, those key questions they ask in that Strive to Thrive report, they're almost like a checklist for future development.
Yeah, what are they prioritizing?
Well, things like, does this project help with attainable housing? Fundamental needs.
Okay.
Makes sense. Does it improve equitable access for everybody? Does it help build more of those like mixed-use hubs, not just downtown, but in other neighborhoods too?
Spreading out the amenities and convenience.
Yeah. And the big one. Is it actually feasible? Can it realistically happen?
Right. Practicality matters.
So these questions, they're basically shaping what gets built, which directly impacts where the rental investment opportunities might be.
Okay, so that's the big picture, the city's vision. What about the nuts and bolts, the rental market right now?
Yeah, let's dig into the numbers. This is where it gets really interesting if you're considering the market.
Definitely. So looking at the data, Zumper's reporting the average rent in Pensacola as of, late April 2025 is sitting at $7,750.
$1,750. Okay. How's that trending?
Well, what's interesting for investors is the momentum. It's up 1% just in the last month.
Okay, short-term bump.
And up 3% over the last year. So steady upward movement.
How does that compare locally, like nearby areas?
Good question. Zumper also shows Bellevue, which is nearby, right? Their median rent is $1,700. Pensacola's is about 3% higher.
So a bit stronger demand or pricing power in Pensacola itself, potentially.
Potentially, yeah. It suggests Pensacola might be a slightly hotter market right now.
And that $750 is just the average, right? What's the spread look like?
So it's pretty wide. Zillow rental manager data shows listings, from maybe $700 on the low end all the way up to like $6,000.
Wow, okay, so opportunities across different price points, different types of properties.
Yeah, exactly. It's not just one narrow segment. But let's circle back to those rent increases.
Yeah, that 3% year over year, and especially the recent 1% jump.
The reports from M&G Real Estate Advisors give us some more context there. For Q2 2024, the average rent across the whole Florida Panhandle was $1,583.
Okay, so lower than Pensacola's current average.
Right. But here's the key thing. Pensacola specifically saw a 4.5% rent increase just in that quarter over quarter.
Whoa, 4.5% in 3 months.
Yeah. That significantly outpaced the broader Panhandle average.
So that signals maybe stronger, faster growth right there in Pensacola, something investors should definitely know.
Absolutely. It points to particularly strong demand dynamics within the city itself.
What else did MMG find? Occupancy rates, new supply?
Yeah, occupancy was solid, 92.1% across the Panhandle in Q2 2024. That's pretty healthy.
Definitely. Most units are filled.
And maybe even more encouraging for investors looking ahead, net absorption, which is basically how many units got newly filled.
Right, the demand side.
It actually exceeded the number of new units that were completed in that quarter.
Oh, interesting. So more units were rented than were built?
Exactly. And that reversed a trend that had been going on for 8 straight quarters.
8 quarters. So 2 years of supply, maybe outpacing demand, and now it's flipped.
It looks that way. Demand seems to be catching up and overtaking new supply, at least in that snapshot.
Okay, for an investor, that sounds good. Tighter market, maybe less competition finding tenants.
That's the implication.
Hmm.
Fewer vacancies, potentially more upward pressure on rents.
So if fewer new rentals are coming online and more people are renting the existing ones, that points towards continued rent growth, doesn't it? Makes it look attractive.
That's certainly the logic. And MMG seems to agree. They anticipate that the number of new units being delivered will drop off significantly by mid-2025.
A slowdown in new construction.
Yeah, they're projecting like a 65% drop in units breaking ground this year compared to last year.
65%, that's huge.
It is. So their outlook for the rest of 2024 was pretty optimistic
Hmm.
because you've got that tightening supply-demand gap. Plus, they mentioned strong in-migration still happening.
People moving in adds to the demand.
Exactly. So it paints a fairly positive picture for potential rental income and maybe property value appreciation too.
Okay, so the rental market itself seems fundamentally strong. Rising rents, high occupancy, tightening supply, but why? What's fueling this? It can't just be sunshine, right? What are the economic drivers?
Right. Good question. It's more than just the general Florida appeal, that innovation coast thing we mentioned earlier.
Yeah.
That's a real factor.
The focus on tech and research.
Yeah, the growth of high-tech companies. Places like IHMC, the Andrews Institute,
Hmm.
they're diversifying the economy beyond, say, just tourism or military.
And that likely brings in a different kind of workforce, maybe higher skilled, higher income.
That's the idea. A more skilled workforce often translates into a strong pool of potential renters, possibly able to afford higher rents. It suggests a potentially more stable, maybe even higher earning tenant base for investors.
And we have actual job numbers to back that up, don't we? From that MMG report again.
We do. Their Q3 2024 report looked at job creation. In August 2024 alone, the Florida Panhandle added 5,200 jobs.
Okay. What sectors?
Employment growth was around 1.8%, with strong gains in areas like education and health services.
Stable sectors.
Right. Also government and even mining, logging, and construction.
Interesting mix.
It suggests a diverse job market, which usually means a diverse and relatively stable pool of people looking for rentals. Good news for landlords.
Okay, switching gears slightly, but it's always linked. Affordability. Housing affordability is a huge topic everywhere. What are we seeing in Pensacola on that front?
Well, the city acknowledges it's a challenge. That Strive to Thrive report specifically points out that the biggest need for affordable housing is often in areas where there's vacant land right now.
So, potential spots for new development.
Exactly. It presents an opportunity, potentially, for developers or investors who could maybe build something that addresses that need, especially if the city follows through on recommendations for higher density zoning in those spots.
Higher density could make affordable projects more viable.
Potentially, yes. It might open up avenues for rental development that aligns with what the community says it needs.
And didn't the report also talk about expanding incentives, not just in special zones?
It did. They suggested extending affordable housing incentives to all residential zones.
Okay, how would that change things for an investor?
Well, it could make a much wider variety of rental projects pencil out financially. You might see more affordable rental options being built across the city, not just in concentrated areas.
Which could lead to a more balanced market overall.
That's the hope, a more sustainable market long-term, where you have options at different price points. It suggests the city's taking affordability seriously.
The report got pretty specific too, didn't it? Mentioning incentives targeting certain income levels.
Yeah, specifically for rental development aimed at households earning 60% of the area median income, or AMI, or even below that.
So targeting the lower end of the market directly?
Right. And they also talked about things like creating special overlay districts to encourage infill development building on empty lots within existing neighborhoods
Yeah.
close to amenities,
Makes sense. Using existing infrastructure.
and collaborating more with mission-based developers, nonprofits maybe, who focus on affordability.
There was also that idea about using public land, wasn't there? Like they do somewhere else?
Yes. Using surplus, publicly owned land for affordable housing. They mentioned King County, Washington, as an example. It's another tool they're considering to potentially boost the rental stock, especially at the affordable end.
Interesting. So while these are focused on affordability, they could still impact the broader rental market, maybe by just making Pensacola a more diverse and appealing place overall.
Absolutely. A healthy city has housing options for everyone. These initiatives, if successful, contribute to that vibrancy, which ultimately benefits all property owners, including rental investors.
Okay, beyond just the buildings themselves, what about livability? That's huge for renters, right? Walkability, amenities.
Huge. And that's another major focus of the Strive to Thrive plan. They specifically want to create more of those mixed-use hubs outside of downtown.
So neighborhood centers, places where you can walk to shops, maybe grab coffee, run errands.
Exactly. Making daily life more convenient without always having to drive downtown. For investors, properties near these developing hubs, they could become really desirable.
Yeah, I can see that. Convenience is a big selling point for renters.
And related to that, the report detailed actions to improve mobility. Things like pilot projects for safer streets, making areas more pedestrian-friendly.
Safer streets, more walkable areas, that boosts appeal.
Definitely. They even have a specific goal. Increase the percentage of residents living within a 15-minute walk of public spaces, parks, plazas, things like that.
If they achieve that, or even make progress, rental properties in those improved neighborhoods could really benefit, couldn't they? Maybe command higher
It's
rents.
very likely. Quality of life improvements directly translate into desirability for renters. Walkability, access to green space, local shops. These are things people increasingly value.
The report even mentions specific areas, like redeveloping underutilized spots. Carpenter Creek came up.
Right. Transforming an area like that into a mixed-use district, maybe focused around trails. Imagine rentals near that.
Yeah.
Big draw for people who like outdoor activity, community connection.
So these planned infrastructure and livability investments, they could significantly lift the value proposition for rental properties in certain parts of Pensacola.
Precisely. It makes those areas more attractive not just to live in, but potentially to invest in for rental income.
Okay, but it can't all be positive news, right?
Okay.
We need to talk about potential challenges or downsides. That Reddit discussion brought up some concerns,
Yeah, it did. Important to be realistic.
like rising costs,
Yeah.
housing costs, cost of living overall. Pushing out locals was the concern. How should an investor think about that?
It's a valid point. While rising rents are good for an investor's ROI, you have to be aware of the affordability squeeze on the local population. A market that becomes too expensive can face other issues down the line. A balanced perspective is needed.
The Reddit thread also mentioned worries about Florida's education system. That could matter for families looking to rent.
It definitely could. Families with kids prioritize schools. So the perceived quality of local schools could influence demand for rentals, especially larger family homes, in certain areas. Investors might want to research school districts near their potential properties.
And the really big one that came up, insurance costs in Florida.
Hmm.
People seeing huge jumps in their mortgage payments just because of insurance hikes.
That's unavoidable context for Florida property ownership right now.
How does that hit a rental investor specifically?
Directly on the bottom line, higher insurance premiums mean higher operating costs. It eats into your profit margin. Simple as that.
So you absolutely have to factor that in when you're running the numbers on a potential rental property.
Absolutely critical.
Yeah.
You need realistic current insurance quotes. It can significantly change whether a deal makes sense or not, and it might influence the rent you need to charge just to break even or make a profit. It's a major factor in Florida right now.
Okay, one more potential twist. We saw that blog post mentioning a slowdown in migration to Florida generally in 2024. Tampa saw a big drop, apparently.
Right, the Florida's appeal hits the skids idea.
But the suggestion was that maybe Pensacola was bucking that trend, holding steadier.
That's a really interesting point for investors. If overall Florida migration is slowing, but Pensacola is maintaining its draw, that could make it a comparatively more stable market.
Less risk of demand suddenly drying up compared to other boom areas.
Potentially.
Yeah.
Consistent population growth, or at least stability, is fundamental for rental demand. If Pensacola is proving resilient there, that's a significant plus.
Let's not forget a unique aspect of Pensacola, the military presence. Naval Air Station Pensacola, how does that play into the rental market?
It's a huge constant factor. NAS Pensacola means a steady stream of personnel and families needing housing.
Both on-base and off-base, presumably?
Exactly.
Mhm.
While there is base housing, many choose to live off-base. The NAS Pensacola housing info we saw put the average off-base rent near the base around $2,000 a month, and that excludes utilities.
2,000 a month. Okay.
And there's also something called the Rental Partnership Program.
What's that?
Participating landlords offer perks to eligible military members. Maybe discounted rent, no application fees, a lower security deposit.
So it makes it easier for military folks to rent off base.
Right. And for landlords near the base, It could mean access to a reliable pool of tenants who are actively being steered towards participating properties. It's potentially a win-win.
So proximity to the base could be a strategic advantage for a rental investor.
Definitely something to consider in your location scouting.
One last area, new construction. If an investor is thinking about maybe building a new property to rent out eventually, any sense of the costs involved?
We saw some general estimates from Estimate Florida Consulting, just ballpark figures, of course.
Like what?
For, say, a new three-bedroom house in Pensacola, the construction cost might range somewhere between roughly $317,000 and maybe $526,000.
Quite a range.
Oh, yeah. Very dependent on the exact location, the finishes, the builder, market conditions, all sorts of things.
So those are just very rough starting points. Need detailed local quotes.
Absolutely. Crucial for anyone thinking about building new rentals.
Okay, we've covered a lot of ground. Let's try to sort of wrap this up for our listener who's weighing Pensacola rentals. What are the big takeaways?
Well, I think the overall picture looks pretty positive, honestly. You've got a market that's clearly growing.
Yeah, the economic diversification, the city planning.
Right. And that seems to be driving increasing demand for rentals. We see that in the rising rents, the healthy occupancy rates.
And the fact that demand seems to be outpacing new supply lately.
Exactly. Plus, the city isn't just letting growth happen randomly. The focus on livability, on creating those mixed-use hubs, improving walkability, that enhances the appeal for tenants.
So properties in or near those areas could become particularly attractive investments.
I think so. But
But you got to go in eyes wide open. Right?
absolutely, you cannot ignore the headwinds. Rising insurance costs are a major one. You have to factor that into your numbers.
Affordability pressures are real too.
Yes. But on the flip side, that innovation coast growth and the steady military presence, that suggests a solid, potentially higher income tenant base.
Okay, so summing it up, Pensacola looks like a market with pretty strong underlying fundamentals for rental property investment. You've got growth, planning, decent rental stats.
Yeah, the combination of the economic drivers, the focus on quality of life, and the current rental market dynamics, it does suggest opportunity.
But diligence is key, especially on costs like insurance.
Always. So this deep dive hopefully gives you a really solid snapshot based on the info out there right now.
All right, so here's a final thought for you to chew on. Thinking about Pensacola's path, that planned growth and the push for livability, what specific types of neighborhoods or maybe what kinds of rental properties do you think will really shine for investors over, say, the next 5 or 10 years?
Good question. And tied to that, with this growing emphasis on mixed-use, walkable places, how might what renters want change? What amenities become non-negotiable? What will the tenant profile look like?
Lots to think about there. We definitely encourage you to keep digging into these sources, keep watching the local developments as you explore this really dynamic Pensacola market.